Welcome to this Brand Bitesize. In this video, we're going to talk about the Personal Savings Allowance and the Dividend Allowance. The Personal Savings Allowance and the Dividend Allowance are two income tax allowances which apply to specific types of income. These apply in addition to the standard personal allowance. The Personal Savings Allowance is specific to savings income. It allows individuals to earn up to a certain amount of interest in any given tax year without having to pay income tax on it. The allowance is £1,000 for basic rate taxpayers and £500 for higher rate taxpayers. Those liable to additional rate income tax do not benefit from a personal savings allowance. Eligibility is based on total taxable income, including the interest itself and any dividends payable, but deducting the gross value of any personal pension contributions and gift aid donations. The dividend allowance is a flat rate of £500. This applies to everyone regardless of their earnings or income tax rate. It allows up to £500 in dividends to be earned in any given tax year without any liability to tax on them. The limit is the same regardless of whether the dividends are paid from collective investment funds, listed shares, or holdings in a private limited company. Any dividends above the allowance are taxed at the individual's applicable dividend tax rate. It is important to note that neither of these allowances extend the tax bands in the way that, for example, pension contributions do. Instead, the allowance uses up part of the income tax band, but is charged to tax at 0%. Let's look at an example to illustrate this. Joe is employed with gross earned income in the current tax year of £42,800. He also received dividend from a share portfolio of £8,100. The first step is to deduct the personal allowance from his earned income to calculate his taxable earned income. We then work out the tax on this. The basic rate band is £37,700, so his entire taxable earned income of £30,230 falls within the basic rate band and will be taxed at 20%. He now has £7,470 of his basic rate band remaining. The dividend allowance uses another £500 of the basic rate band, but is charged to tax at 0%. He now has £6,970 of his basic rate band remaining. His total dividends are £8,100, so £6,970 falls within the basic rate band and is therefore taxed at 8.75%. The remaining dividends fall in the higher rate tax band and are therefore taxed at 33.75%. It is important to understand how the allowances interact with the tax bands. A common mistake is forgetting that the personal savings allowance and dividend allowance, although taxed at 0%, still use up part of the basic rate band. Thanks very much for watching. We'll see you next time.